Hello, and welcome to Trestlebridge Capital's monthly market and economic recap. Before we begin, here's a quick note from our legal team. Today's discussion is hosted by Eric Jefferson, managing partner of Trestlebridge Capital, as he breaks down this month's key market updates. Let's get started.
Welcome to the October market and economic recap. Another strong month for risk assets, despite October historically being a more difficult period. Theme we've seen play out through the course of this year. A market once again led by companies tied to AI. That being said, have started to see an interesting reversal as of late where companies simply spending money on AI hasn't translated to higher stock prices. The market has started to take a much closer look on how much and in what areas companies are spending their capex, their capital expenditures, ultimately looking at what type of return are they getting on those investment dollars. Big picture, think that ultimately is a sign of a healthier, more fundamentally sound market, certainly from an investor response, thinking about what are the names you want to own in a portfolio today. Another interesting trend we have seen across the board, earnings have been very positive, but interestingly enough, seeing more of a positive reaction to stock prices for those lower quality, less fundamentally sound companies. Those for a while had been forgotten about, and we now are starting to see much more of a broadening out. All else being equal, think that is a good sign with respect to more encouragement or optimistic outlook for macro conditions moving forward. Turning to the bond market, Federal Reserve did cut interest rates by 25 basis points as expected. Therefore, didn't see much reaction in the bond world. Returns virtually flat on the month. Again, still up shy of double digits, representing one of the better years for fixed income investors as of late. Another interesting trade we followed very closely this year is gold. That continues to rally, granted, did have a fairly sharp and sudden pullback at one point earlier in the month. Think the fundamentals do still remain intact there. We talk a little bit further about debasement in this month's client letter. Again, have seen some very lofty forecasts for the price of gold. Ultimately, at the end of the day, where our government does still continue to spend more than it takes in, that delta needs to be made up via more loans. In that scenario, do think tailwinds certainly continue for gold as we round out 2025 and on to early next year. Turning to the geopolitical front, the federal government still remains in lockdown. Granted, haven't seen any major implications with respect to the market or the economy today. Obviously, though, the longer that shutdown does continue, the bigger those implications will eventually become. Thus far, doesn't seem like either side is potentially close to some sort of negotiation. One piece we will continue to monitor very closely, but again, provided that is resolved at some point in the short to intermediate term, I do expect the market reaction to be fairly muted at this point. That's all for this month. As always, appreciate you taking the time to tune in. And if you do have any questions, please don't hesitate to reach out. Thanks again.